Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Brian Bride, our Director of Payroll Operations. How you doing, Brian?
I'm doing great. How are you?
I am doing just wonderful. And part of that is because one day I'm going to retire. And that gives me a really optimistic look at my future. So I want to ask, what is happening in the world of retirement?
Yeah. So, in payroll, a big portion of it is deductions, deferrals, and 401k is one of those. So most employers have a 401k plan or maybe a simple IRA if you're a smaller company. But if you don't, many states are starting to mandate a retirement policy. So right now there's probably about 10 states that have it. And I would say about 10 more by the end of 2025 are going to be maintaining a retirement policy.
Okay. And then it's pretty safe to say that more and more will probably fall in line with this.
Yeah. I mean, I would see it coming down the line within a couple of years that almost every state would have. You at least have to offer something, even state-based to the clients or your employees in order to save for retirement. I mean, from an employee standpoint, why would I work in a state that didn't have some type of retirement option when the one next door did? Right. I mean, setting aside a little bit of money every payroll is a really important thing to do. And being able to offer that to your employees is very, very important. That's true. So what kind of retirements are available through these, not just the state programs, but through the employers as well? Sure. So you have a couple options. If you are an employer, you can do a 401k plan, which is the most common one that's out there. So with a 401k plan, you go to a fund, let's say John Hancock, and say, hey, I want to open up a 401k plan. They give you some rules like how long they have to work, how many hours, and then you start a fund with them, and employees defer money out of their paychecks. And then that goes into the fund, and then they get to invest in depending on what it looked like with John Hancock. So let's say you're an employer and you say, all right, we're going to offer 5 funds. The employees put their money in, they pick what fund, and it grows in there depending on 401k is pre-tax, Roth is post-tax. So that's how the growth works. Now, if you don't have a plan and you're in one of these mandated states, they offer some options. Now, some of them are 401k, which is the most common one, but majority of them are a Roth IRA. So just like a Roth IRA, you could open up with any person, right? As an employee, you could open up with Vanguard, your own Roth IRA. There's ones that are run by the state, and these are these mandated plans. Okay. So, is there any perks between either one that you've seen, at least from a payroll standpoint? So from payroll, we're able to handle both in regards to submitting contributions via file transfers and transferring funds in some instances, or even the enrollments we can handle. So we're pretty agnostic at YPD for retirement plans. We want you to pick the best one that fits your business. So no matter what it is, if it's a state plan or your own, we can handle it. Okay. And what are we looking at as far as people who don't fall in line with these retirement programs, the state mandates? Sure. So with the state mandate, they're going to fine you if you aren't offering it to your employees. Do we have any numbers on that yet? Or because obviously this isn't the same as just a payroll where, hey, they didn't get their check this week. Right. They can immediately just fine you. Obviously, this is all kind of newer coming in. So is there anything that we have in paperwork yet? In regards to fines, it varies by states. Okay. So you'd have to look at the state's particular website to be like, all right, if I don't participate, here's the fines that I get. And this is all stuff that's built into your payroll software as well, right? Right. So with iSolve, we can handle almost any kind of retirement contribution, be it a state sponsor plan or an employer sponsor plan. And do those connect directly to the providers as well? So like you mentioned, like a John Hancock. Right. So yeah, it depends on the system. So some we put through a third party record keeper, other ones we can send direct. Just all depends. We can handle almost any kind of setup. So really when we're talking about all these payroll services,
again, they are connected into so many other networks, right? Is security a big concern with these?
No, because everything is secured through iSolved. So they have the highest security rating. So it's not really a problem in regards to security. So it really does help when you can electronically make these transfers. So you're not sending in a check with a payroll report somewhere and it's in a mail and it could get misplaced or something. We're sending money directly from account to account and the data from the secured payroll software to the secured retirement record keeper.
Perfect. Is there anything else you want to add in about these retirement funds?
Yeah. So, you can pick your own, right? But there's a couple advantages and disadvantages for picking a 401k, right? So, compliance is a big thing with 401k. You have to have a fiduciary that is, that backs the funds. You have to have a sponsor. A lot of times you need to pay for a third party to help you administer the fund. So those are some kind of expenses. With the state sponsor plan, you don't have that compliance. Your compliance is limited. You have to offer it to your employees and set them up in the system to be like, oh, this is a new employee, which we transfer over. And they can opt in or opt out depending on what it is. A disadvantage of offering the plan is there's something called Secure Choice 2.0, which is helping boost retirement savings. So let's say you never had a plan before and it's mandated. There's some provisions in Secure Choice 2.0 where you can get tax rebates for setting up a 401k plan. So that's, a little outside the scope of what we talk about today, right? Those kind of things. But you kind of have to look to see like, hey, if I pick the state sponsor plan, they can be limited. It's, a limited maximum amount. So most of them are IRA. So it's 6,000, 7,000, depending on the limit. 401k, it's like 23,000. So depending on your company and the employees you have, if you want to offer a match, all that kind of brings into that kind of decision. If that's what you want to do, you'd go to a retirement specialist and figure that out.
I was about to say, so really picking these plans is kind of dependent on the types of employees you have, how they look on your payroll to see which benefit matches what you can offer.
Right. Yeah. Maybe if you're a restaurant and you got, traditionally a higher turnover, Secure Choice is probably a really great option for you, right? Mm-hmm. Because they can take it with them other places. They don't need to roll it over. Let's say you're a restaurant and you do have a 401k and somebody leaves. There's all the things you have to do when someone wants to roll over those funds somewhere else. And you're the fiduciary, so you have to approve it and then make sure it gets transferred over. You have to audit that kind of things. But if you just offer Illinois Secure Choice, then they can take that with them wherever they go and they access it themselves. A lot of self-service on them, which we talked a lot about, that they can move that with them if they work in the same state around.
So what about like an auto repair shop, which wouldn't have as much turnover as, let's say, like a restaurant? What's probably the best option for them? Right.
So then you really want to talk to a retirement specialist because it depends how your size, how many employees you have. Sometimes when it's a smaller organization, you might go with something called a simple IRA, which is a little bit lower limits, but there's more of a match and more employer contributions that they can do. So all that's kind of out of the scope, but it's really important that if you're someone that thinks they want to offer a 401k, that you reach out to a retirement specialist to help you through that. And at YPD, we're pretty agnostic to that. Like John Hancock's a good choice, but we're setting up for integration with everyone we can find. So it doesn't matter. We want you to pick the best one for your business and we'll fix it on the back end.
Perfect. Thank you so much, Brian.
Yeah, thank you.
You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.